If you're not sure what to do with this market environment right now, don't worry, you have options. So I brought ExplosiveOptions.net executive Bob Lang. Hi Bob, how you doing?
Vaz, it's great to be with you today. Thank you very much for having me.
Thank you so much, and thank you for bringing me your book. We're going to talk a little bit about that later. It's nice and gorgeous. How do you like to protect your portfolio with options?
Yeah, so a lot of people understand that markets go up pretty much in a straight line. If you look at the longer term charts of markets, go back 60, 70, 80, 100 years, and you see that markets pretty much go up from the bottom left to the upper right, almost unimpeded. And you see bear markets are mostly like a blip on the screen. They don't barely even register, right? However, you know what? There are moments in time where the markets do go down. You know, shocking, right?
Yes.
Markets actually do go down.
We hate to admit it, but it happens.
So there are times when you have to protect your portfolio. And what we do to protect portfolios is use options. And the way we use options to protect our portfolios, let's say you're long a basket of stocks, right? And you have that market exposure. And market exposure is, we call that beta, which is market risk, right? So you have a beta, you know, maybe your portfolio is something similar to what the market risk is. You are actually vulnerable to market moves to the downside as much as everybody else is. So the way to defend against that is maybe you buy some market puts. And market puts they're put options, and there's two different kinds of options. There's called call options when you're bullish on stocks, and when there's put options when you're bearish on stocks.
Okay.
You're not necessarily trying to make money. All you're trying to do is dampen the portfolio volatility. So in case we do get a correction, much like what we saw in December, the markets really corrected a lot in a very short period of time. A lot of people lost a lot of money, right? If they didn't protect their portfolios. If you had some puts on, if you had some market puts, maybe some S&P 500 puts, when the markets were going down, the value of those puts were going up. And even if your stocks started going down, it offset that loss. It's
a nice little insurance. That's how that plays out.
That's all we're talking about is insurance here. Not necessarily trying to make money, unless you're a believer that the markets are going to go down for a very, very long period of time, and they can only go down to zero. Right? I mean, the S&P 500. I know there's a lot of people out there who predicted that the markets are headed much, much lower. It's not happening now, but if the markets do head lower, you're going to make money, but you're going to lose money on your long side. It's insurance.
So that's one of your favorites. You mentioned a lot of strategies in your book. How does options help people use leverage with their stocks?
Right. So options give you a great deal of leverage, right? So it allows you to enhance your portfolio returns if you use them a certain way. And the way I like to use options with stocks, Voss, is I like to try to create another income stream. And you can create another income stream by selling calls above your stock. Let's say you own 300 shares of IBM, right? And you got that nice dividend. The dividend's about 4%, but you want to get some more money out of that. So we can extract some more money by selling some calls above the stock price. So let's say the stock price is $140, right? And you think that the stock is going to stay below 150 over the next 4 months. So we're in March, so let's say we're talking out to August. Do you think that the stock will be under 150? So you can sell 3 calls, which is, 3 calls would be against 100 shares each of the stocks, so it's 300 shares. Your 300 shares. You could sell the premium on that 150 call and maybe make $2 or $3 of premium, and you're going to collect that money. And they don't take it away from you. That's your money that you get to collect against your stock.
Right.
So it's almost like another dividend, and you continue to get your dividend. So
another stream. Well, it's great. Like for people who want to, let's say, trade Amazon and they can't. I mean, that's a lot of money per share.
That's right.
That's a great way to get into it.
Well, if you own the Amazon stock, I know there's a lot of people out there I know who own Amazon for years, right? And they've watched it go up from a couple $100s when it was back in 2013 to about $1,600, $1,700 it is today. So it's like 600%. It's gone up a lot. And what you do is you got to protect yourself, protect those gains. And the way to do that is to use options in a way that I can collect some income. Amazon doesn't pay a dividend. Maybe someday they will, but they don't pay a dividend. So you can collect some premium. The stock is a pretty big mover. It moves, $25, $30 a day sometimes.
Right, yeah, of course.
You can collect that premium and, and not have your stock called away from you, and and collect that and let those options expire. Just do it over and over and over again.
See, for even the beginners, Bob makes it less scary to get into the options market. So Bob, let's say after this interview, our viewers want to start buying some options. How do they know where to start? Like, they look at their portfolio, how do they know what stock to start with?
Right, and one of the most important things with options is to make sure there's plenty of open interest. What open interest is all that's available to trade, right? So if you look at a stock like Apple, or Microsoft for that matter, or Intel or Cisco, these stocks are very widely held. They're held by a lot of big institutions, and there's a lot of options, open interest there. And so you get what does the open interest provide you? It provides you a lot of liquidity and a better chance to get in and get out, because that is where a lot of option players make mistakes and they falter, is that they end up having what's called slippage. They're not able to get out of a trade. Let's say you're getting into a trade at $3.30, the stock moves up, and you can only get out at $3.30 out of an option. You haven't made any money, right? The stock has gone up, but you haven't made any money. It's because of that slippage. That's a problem. So what I think, what you can do is you find good liquid stocks. You find options that are manageable, meaning they're priced in a way that you can make money in the short term and the long term. And you go with those, and then you experiment a little bit. And you can't be afraid to lose money. I mean, that as far as the options market is concerned, you really don't have an edge unless you use something like a book. You use technical analysis or something like that.
Yes, that's my follow-up question. Do you use technical analysis to follow what stocks to apply options to?
Always, absolutely. And
yes, you're talking to the technical girl, so this is a treat for me.
I love it. So it starts with the charts for me, and if the charts are telling me that there's a good chance, a good probability that the stock is going to move up, then I'm shifting into options gear. Okay, well, what options am I going to buy? Because I would normally say, if I'm looking at the stock, like this morning I was looking at Apple. Okay, for instance, good example here. So Apple had gone down a little bit late last week, and it cut through $174, $173. Today it's having a really strong day. Obviously, the markets are up here today on Monday, and the stock is having a really strong day and really good volume. Right now, if I want to buy the stock, a couple hundred shares of the stock is going to cost me a lot of money. It's going to, 200 shares of the stock is going to come to $35,000. I can buy some options if I think that the stock is going to continue to follow through, which I believe the chart is telling me it's going to follow through to past 180 over the next month and a half. Well, I can buy some options that are, I'm going to have far less money to put out than I would with the stock. So I can buy, like, say, 5 call options for like $2 or something like $2.50 for the 180 strike, for instance. That's going to cost me $1,000. I'd rather pay $1,000 than $35,000.
Exactly.
Get incredible leverage with that.
It's a great way to get into the market.
Yes.
But what kind of technical indicators do you like to follow, or any tricks?
Well, some of my favorite indicators include the MACD, relative strength, and I liked an oscillator like the Williams percent R, which I've been using very much, pretty much for about 10 years. The Williams percent R is kind of like a stochastic indicator, and it has overbought, oversold, and when a stock gets overbought, Voz, I know there's a lot of people who see overbought and oversold as level. At overbought, you got to sell. Oversold, you got to buy.
Right.
Not necessarily. I'm a momentum guy. I like momentum indicators, and when the stock hits a certain level, and you get some momentum on that, it keeps going.
Right.
It keeps going and going and going. I mean, look, we talked about Boeing a little while ago. Boeing, obviously getting hammered today. But if you look back for the last 2 months, the stock gapped up on earnings, and it just kept going and going and going.
Yeah.
So all those momentum indicators were telling me it's a buy, buy, buy. You've got to get going and get on this stock. Obviously today, a different story, but with that airplane crash yesterday.
But you can continue to use that to see if the momentum is still behind it.
That's exactly right. Yeah.
So listen, what kind of things are you considering in the environment right now that could be a little dicey?
I think, some of the news that's out there that could potentially hit the markets, like with the trade, with the issues with China.
Yes.
If there's something that's happening that's going to affect the resident of the White House right now, that could certainly shake markets a little bit. But I'll tell you what right now is the market is showing high complacency, which means the volatility is very, very low in the markets. And that's kind of dangerous right now. And when volatility is low, it means option prices are low. So the market is not expecting very big moves to the downside or the upside, mostly to the downside. And that's always fearful for me. I get a little bit scared when everybody's into the pool and they're all going long in the markets. Like today, I mean, everybody's piling in.
Yeah.
And they were towards the end of the day. Markets are up strong today.
Look at that green board right here at the New York Stock Exchange.
Unbelievable, huh? Everybody's coming into the pool. So it makes me a little bit nervous, and makes me a little bit worried that, you know what, we could get. Let's remember that December was only 3 months ago, and everything was falling. And we had only 3 up days in the whole month of December. Can you believe that? I mean, towards the end of the end of the month, everybody couldn't figure it out. You know, I mean, we dropped 10%. Just like that.
It was a shocking holiday.
Yeah,
especially for a lot of people who checked out already and they're on their island.
Listen, as Santa Claus was ready to make his run on Christmas Eve, the markets had hit levels we hadn't seen in a couple of years.
So what does this mean to you, Bob? Are you seeing this as a new wave of maybe some bearish sentiment? Is this we could be entering a bear market?
Well, I think we've been in a bear market for a while now. And especially since one of the indicators that I follow is the MACD, and once the monthly MACD had crossed over just a few months ago, we're bearish. We've been bearish for the markets for the past 6 months since September. And
wow.
once those signals change, I mean, they could change in a couple of months, 2 or 3 months. Once we get those crossovers, I'll still be feeling that this is a bear market rally.
Really?
It's been a huge rally, don't get me wrong, from December up until now.
But you're deeming it as a corrective rally.
It's a corrective, it's a bear market rally. Some of the biggest rallies that we've seen have been in bear markets.
Wow.
I've seen some of the most spectacular rallies occur in 2000, 2001, and 2009. We were in bear markets back then, and we had some humongous rallies. Volatility started to come down. People were starting to get that warm and fuzzy feeling, thinking that markets are going to continue to go up, and they were wrong. And we would turn right back down around. So I think that there's a possibility we can continue to head up. Momentum has been pretty strong for the last couple of months. We've had really good breadth. We've had volatility come down. We've had put-call ratios coming down. We've had all the indicators there, except the price action hasn't been exactly what I want it to be. We get above that 2820 level on the S&P 500.
Oh, yeah.
That's a level that we saw back. We failed on, not last week.
Multiple times.
December, November, and October. 3 times we failed at that level.
The bulls and the bears are fighting there.
That's right.
Okay.
It's a tug of war right there. We saw sellers hit the bid last week really hard. They got out right in front of that.
So Bob, what other risk management tools do you like to use besides technical analysis and options?
So some of the risk management tools, I only allocate a certain amount of money to options, right? And it's a very small amount. I have a large amount of my money in stocks. I have those protected with some puts. I keep a lot of cash. I mean, cash is really king. Whenever it doesn't matter whether markets are on a bull run or we're in a bear market. If you have cash, that's my most important defensive tool. I always have some dry powder ready in case the markets come down.
So tell us a little bit about your new book, which, by the way, Mr. Lang gave me a signed copy. Thank you.
You're very welcome.
That's so exciting.
Pleasure.
So what can we find in here?
So I wrote this book a couple of years ago called Know Your Options. We first published it last July in 2018. I'm very proud of the piece of work we put together, and it talks about some of my experiences and some of the experiences of some other well-known traders like Steve Burns, Michelle Schneider. Todd Gordon is in there. He's very well known and is on CNBC as well. We talked with Skip Rashke, who's been a pioneer in options trading since the early 70s. And Dave Landry, who was a mentor of mine, I first started following almost 20 years ago, and he taught me almost everything I know about technical analysis.
Yeah, you have Jim Cramer calling it a buy.
And then the forward is done by Mark Chaikin, who's a good friend of mine. Everybody knows who Chaikin Oscillator and the Chaikin Money Flow. So Mark wrote the forward for me on this book as well, and Jim has a quote in there too. So we talk about options trading, we talk about technical analysis, risk management, some stories from them and some stories from myself about how my focus is always try and avoid some of the mistakes that I've made over the years. I've made them all, at least a few times, you know, and that's okay. I've learned from them, but I'm hoping to share some of the information with you that really hurt me a little bit, and maybe you can avoid those missteps, those pitfalls down the road, so you can make money.
Thank you for putting that together for us.
It's my
What's
pleasure.
your favorite piece of investment advice?
My favorite piece of investments. Well, diversification is the only free lunch on Wall Street. I think that's probably the best one. And Jim Cramer talks about that all the time on Mad Money.
And you are an analyst for Mad Money, by the way, guys.
I do some technical analysis for Jim on Mad Money, usually once a month on his trader on the off the chart segment. But I think diversification is the only free lunch, and I think you can diversify by buying lots of different stocks. You can buy some protection, and have lots of different asset classes. You could have money in fixed income. You could have money in cash. You could have money in stocks. You could have money in options. Get that diversification out there. You diversify yourself away from the market risk. And if things happen out of your control, right out of the blue, you're not going to get hurt.
Bob, how do we follow more of you? We can go on your website, explosiveoptions.net, where you have a chat room, which I think is so cool.
I have the chat room. You can sign up through the website, explosiveoptions.net. We have a chat room which I'm in every single day.
He's in there right now, typing to us.
We have some great traders on there in the room, and they work with us on a regular basis. We have some amazing options flow information and analysis in there as well. And then on Twitter, I can be found at Aztecs99, and on Facebook as well too. So I'm all over the place.
He's a great follow, by the way. A lot of technical analysis options. Bob, thank you so much for coming to New York to tell us about your book and how to trade this market.
Thank you, Boz.
We love having options.